Okay, there we go. Okay, let's try that again. So hi and welcome everyone. Thanks for joining today. We have an hour set aside, but I'm going to try to keep this webinar to about 45 minutes, which should give us plenty of time. As a reminder, this webinar is being recorded and it will be posted to our offering page on Republic for future access. This presentation may contain forward-looking statements. Please refer to our offering page on Republic and our Form C filed with the SEC for full disclosures and risk factors related to the offering. So today, I'm going to provide an overview of Bioverge, which will serve as an update for those of you who are already familiar with us. I'll discuss our regulation crowdfunding raise on Republic and answer the question why you should consider investing. And finally, I'll leave plenty of time for Q&A at the end. Please type in your questions in the Q&A chat box, and I will either get to them real time if I see them and they're relevant at the time, or I'll be sure to address them at the end. Okay, so let's start with an overview of Bioverge. I'd like to start with my personal journey because it's the reason that Bioverge exists today. 8 years ago, I saw science fiction come to life when I met a little girl by the name of Evie who was cured of a previously incurable genetic disease. At that time, I was working at the California Institute for Regenerative Medicine, or CIRM for short, helping to manage a $3 billion fund and investing in regenerative medicine therapies with a focus on translating novel medicines from the laboratory bench to the bedside of patients. At CIRM, I managed the therapeutics group, which oversaw a portfolio of over 50 clinical trials across a variety of diseases, such as cancer, neurodegenerative diseases, and rare genetic diseases like SCID, or severe combined immunodeficiency, which is what Evie was cured of. At that time, I also realized as an individual, I wanted to invest in these promising companies and technologies, not just because they were helping to usher in a new era of medicine, but also because they were giving us the ability to generate seriously outsized financial returns. For example, one of the companies that we invested in at CIRM went public at over a $1.2 billion valuation. That was Orchard Therapeutics, which licensed the technology that cured Evie. We had another company that was acquired for about $325 million, and yet another was acquired for $4.9 billion. So I decided to create Bioverge along with my co-founder, Rick, as a way to start investing. Most of you know who we are already, but for those of you who are new to our community, Bioverge is a financial technology platform with the mission of democratizing access for accredited investors, family offices, registered investment advisors, and private wealth managers to invest in healthcare startups that are bringing science fiction to life. I'll talk more about what that means a little later in the presentation. I also just want to mention we recently launched a brand new website, so if you haven't had a chance to take a look, please do so. I like to describe Bioverge as a venture platform because in many ways, we are innovating on what it means to be a venture capital firm. We offer our investors access to highly vetted biotech and healthcare deals and the ability to invest alongside top-tier VCs. We have a growing network of over 5,000 accredited investors, and we offer our investors 3 ways to invest with us. One is building your own portfolio on a deal-by-deal basis. Number 2, through our access funds, which are multi-company SPVs, which are akin to a mini VC fund where we will build a customized portfolio of 15 companies in a given access fund. And number 3 is through thematic funds, which are access funds that are focused around a core technology or disease area, for example, digital health, or we plan to launch a longevity-focused access fund in the near future. I'm not going to go through all of the metrics on this slide, but I do want to add one additional metric that's not on this page that we're particularly proud of, and that's that we have a 0% loss ratio, which means that none of the companies that we've invested in have failed at this point, and we've been investing since 2016. If I'm being intellectually honest, I have no idea a priori which one of our companies will be a grand slam and which ones may fail at the time we make an investment, but so far so good. We firmly believe that we are in the age of biology. Just the other day, I was on Twitter and saw a quote from Eric Schmidt, the former CEO of Google, who said at a recent conference, and I quote, "Biology is the next big thing. If I were young today, I would do biology." I'm not exactly sure what doing biology means, but you get the point. Things like genetic engineering, regenerative medicine, and computational advances are all coming together to create massive opportunities in the space. Through these recent advancements, we are now routinely curing diseases once thought to be incurable, just like SCID, which, if you remember, that's what Evie was cured of. Our investment thesis is focused around what has become known as tech bio, but all we really care about is extending human health span independent of whatever technology gets us there. And if we can extend health span, then we should be able to extend lifespan as well. But here's the key. We want to extend a healthy lifespan. So when we look to invest in a company, the ultimate decision point for us is how will this impact the patient? And by the way, lest we forget, we are all patients at some point in our lives. So this notion between a patient and a healthy individual is highly fluid. As you can see, when our investors invest with us, they are gaining access to invest alongside some of the very best VCs in Silicon Valley and beyond. All of our investments require that the company has participation from other professional investors as a source of what we call third-party validation. So we give our investors access to deals they would ordinarily never have access to on their own. Additionally, from a diligence perspective, this acts as a sort of double diligence. Of course, we do our own diligence, but we're investing alongside other much larger firms that also conduct diligence of their own on each and every investment. I want to circle back to this idea of bringing science fiction to life and explain in more granular terms what that means to us. And here are 3 examples from our portfolio. Excision has built a cutting-edge CRISPR gene therapy platform to generate functional cures for HIV and other viral infectious diseases. They are in the clinic and have already dosed several patients with promising early results. I interviewed their CEO in a recent podcast, and for anyone who wants to learn more about Excision and what they're doing, I would encourage you to take a listen. BioRosa is developing a highly accurate blood test that will detect autism in children as young as 18 months. This is a big deal because using current methods, autism isn't diagnosed on average today until 4.5 years old. There's ample evidence that earlier diagnosis can lead to far better treatment outcomes in some cases, maybe even prevent or reverse the disease entirely. And then there's Butternut, which to me sounds like the movie Weird Science. They are developing miniaturized remote-controlled robots that can deliver drugs to deep targeted regions of the brain, which could be a breakthrough for treating brain cancers and neurodegenerative diseases like Parkinson's. Okay, everyone needs an up and to the right chart in their presentations, right? So seriously though, our pace of growth has been accelerating. And one of the primary uses of proceeds from this round is to continue accelerating our growth in assets under management, or AUM, by introducing Bioverge to a larger audience of accredited investors, private wealth managers, and RIAs. We believe that our products are uniquely suited to the flexibility individuals and professional money managers are increasingly demanding. I promise Rick and I don't actually look this similar in real life. I might have to change my photo, but I've already talked about my background from CERM. Before that, I started my career doing healthcare investment banking on Wall Street. I was at Deutsche Bank and Thomas Weisel Partners for a number of years. I transitioned to Burl & Company, which was a biotech VC fund based in the Bay Area, which at the time had 1.5 billion of AUM. I then also spent some time at a company called Notable Labs, where I was vice president of business development. Notable is a precision oncology company, so I had direct operational and hands-on experience at Notable. As an undergrad, I studied molecular biology. I worked in a virology lab, which at the time seemed really obscure, but maybe not so much these days. And I have a master's in biotechnology from Johns Hopkins. Rick provides the perfect complement. We worked together when I was at CERN and he was working at Stanford in their tech transfer office, in the office of their CFO, helping manage Stanford's $250 million venture fund. He was also deeply embedded in the StartX ecosystem at Stanford and saw the amazing IP Stanford was spinning out to create hugely valuable companies in the life sciences space. We ended up working together when he was at Stanford and I was at CERN, and we came together and saw a shared vision for the future, which has become Bioverge. I very briefly want to mention our podcast. The podcast has been a great way for us to gain broad exposure to the ecosystem and build relationships with co-investors and entrepreneurs in the space. The goal of the podcast is simply educating the public on the cutting edge innovations taking place within the space. We have a lot of fun doing it. Our guests have a lot of fun on the show as well. If you haven't already, I'd encourage you to subscribe. We release new episodes on a bi-weekly basis. Okay, let's transition. I think for the most part, this is what everyone has been waiting for. We can talk a little bit about why you should consider investing in our Republic campaign. We chose to partner with Republic and conduct a regulation crowdfunding offering because it aligns with our mission of democratizing access to the asset class. It's the venture capital asset class. Investing in our raise through Republic is a streamlined way for you to benefit from everything we build and every investment we make at Bioverge. It's akin to a GP ownership stake or general partner ownership stake in a traditional venture fund. To me, this is probably the most compelling slide in the deck for investors or potential investors. A single investment in our Republic campaign means that as a shareholder, you will benefit from two things. Number one, just like any startup, our goal is to build enterprise value for our company, and we may have a liquidity event via an IPO or M&A event in the future. That's why you would invest in any startup. Number two, which is unique to Bioverge, is because our business is structured essentially as an evergreen venture fund. We are constantly making new investments. And as our portfolio grows and our portfolio companies have liquidity events, we're able to pay dividends to our shareholders. We have committed to paying out 10% of any carried interest we receive to our shareholders going forward. As a reminder, the 90% that gets recycled back to Bioverge is used to grow the enterprise value of the business, so shareholders naturally benefit from that as well. That's why we say that as a shareholder, you'll benefit from everything we build and every investment that we make. Okay, so why is now a good time to invest? Good question. Individuals are increasingly wanting to allocate a portion of their portfolio to alternative assets, and in particular, private equity and venture capital, just like what institutional investors and endowment funds have been doing for decades. According to a recent report by consulting firm Indify, published in Institutional Investor magazine, retail investors are expected to account for over 61% of global assets under management by 2030, up from 52% today. That means if you're an asset manager, you can no longer afford to ignore the retail or individual investor. For Bioverge, we believe this supports our business model and means that we are riding significant macro tailwinds. What that means from a practical standpoint is that we have a large and growing market opportunity ahead of us. There are over 13 million accredited investors in the US, growing at a CAGR of 35%. With individuals increasingly demanding access to venture capital style investments, like what we offer at Bioverge, we feel like we are well positioned to capitalize on this growing trend. Finally, and this is my closing slide, why Bioverge? Given the unrelenting pace of biological innovation that we're seeing today, we believe the life sciences revolution in the venture capital asset class is the investment opportunity of our lifetimes. If you are excited about the pace of progress we're seeing and want to be a part of it, investing in Bioverge through Republic gives you the chance to participate and benefit financially. We believe the opportunity ahead of us is crystal clear. We want to be the place for individuals to invest in biotech and healthcare, and we have the opportunity to put millions of dollars to work to benefit our collective future every year. We are working to bring science fiction to life and change the lives of millions, both physically and financially. Okay, with that, I'm going to stop sharing my screen here, and I'm going to open up the Q&A and see if we have any questions. And we have had a number of questions come in, so let me share some of those with you. So we have a question. I had mentioned the Bioverge Network during the presentation. So we have a question about the Bioverge Network. So let me address that. The Bioverge Network is our network of investors, subject matter experts, founders, and co-investors that help us to source and conduct due diligence on new investment opportunities. So essentially, the Bioverge Network allows us in many ways to be much larger than we are as a firm. And so it's a great source of new deals. We have now a portfolio of 37 companies. We get great referrals from a lot of the CEOs and founders of our portfolio companies with new deals and new investment opportunities. That's one of my favorite sources of deal flow. And that is proprietary to Bioverge. We call that our internal momentum machine. And then we have a network of subject matter experts and others who can help us diligence the underlying science of the companies that we're looking to make an investment in. And so that could be things like the scientific rationale, the supporting data for what they've done, the next killer experiment or critical milestones that they're looking to overcome. So those are all different segments of the Bioverge network. I'll also just mention the network of co-investors that we have is not just great for us sourcing deals and investing alongside, but they also act as potential lead investors as our portfolio companies mature and go on to raise additional round of capital. We can make those introductions, which is hugely valuable to our portfolio companies as well. Okay, let me pull up another question here. So we have a question around defensibility. Okay, so that is a really good question as well. So let me address that. So as I mentioned, the Bioverge network is a big part of what we do. And so the defensibility really lies within the Bioverge network and the portfolio companies that we've built, again, 37. And so I mentioned this idea of the Bioverge machine, but it's really hard for generalist platforms to compete in the healthcare space. Healthcare, as most of you know, is highly nuanced. It's a complex regulatory and reimbursement structure. We're not simply looking for month over month ARR SaaS metrics. We're trying to validate complex biology and science. And so it's really this Bioverge network that helps us to do that. And so that's part of our defensibility. And it's the healthcare focus of our platform, which is a huge part of our defensibility. And it serves as a virtuous flywheel, right? If we can provide more value than our competitors or other platforms to our portfolio companies, then we are going to attract higher quality portfolio companies because of the value that we provide. And if we can do that, we're going to attract more investors because we're getting higher quality deals. And so it's a virtuous flywheel that is building on itself. And so that to us is really exciting. Okay, let me see if there are any other questions that have come up. We have a question about our revenue model. Okay, so great question in terms of our revenue model. So we are structured as just like any venture capital firm. So we generate revenue from two primary sources. One is management fees on all of the funds that we manage. So again, we offer deal by deal SPVs where we charge management fees and carried interest. We get paid carry every time there's an exit on one of those individual SPVs, which is nice. And then we also charge management fees and carried interest on our access funds and thematic funds. So the larger we're able to scale our AUM or base of investments, the more management fees that we're generating in the form of revenue for the platform. The larger our ticket size, meaning the larger amount that we are able to invest on a per company basis, means the larger amount of carry on an absolute basis we may get back as well. So that's why growing AUM is so important to us. We also have other sources of revenue, which are relatively small at this point, but we do have premium features for investors. We have experimented with different offerings like what we call Bioverge Pro or Bioverge Elite memberships, which provide our investors discounts on carry for an upfront annual fee. We have the ability for our investors to buy down their carry on an individual basis as well. But you should really think about our growth in revenue being tied to our assets under management and also how successful we are as investors. Okay, let me see if there are any other questions that have come up. We have a question around our product roadmap. Okay, I always love this question. Okay, so our product roadmap, as I mentioned, we have three core product offerings. One are our deal by deal investments. We have closed 61 individual SPVs. So we will continue doing new individual deal by deal SPVs. We have a lot of investors in our network that like to build their own portfolio. They have their own investment thesis and they are constructing a portfolio that fits with their investment objectives. So that's a key factor for us and actually a big differentiator from a lot of our competition as well that maybe only offer funds. Now, we also offer funds. I mentioned our access funds. Those are akin to mini VC funds where an investor will come and invest one time, and then we build a diversified portfolio of 15 plus investments in a given access fund. We have closed 4 access funds to date. You can see our returns on our website. I won't get into details there. And we are launching our 5th access fund. The goal of the access fund is to deploy capital within about a 12 to 16 month period of time to build a full portfolio. And the idea is that we raise a new access fund on a yearly basis. We have a lot of investors that will only invest in the access fund or only invest in deal by deal offerings, but we have a lot that invest in both. So we have a lot of folks that will invest in an access fund to get complete coverage of everything that we invest in on Bioverge, and then overweight particular investments on a deal by deal basis for companies that resonate with them for one particular reason or another. The third product that I'll mention is our thematic fund offering, which is relatively new. And these are a version of the access fund that is focused around a particular disease or technology type. For example, we have launched one thematic fund in partnership with a corporate entity, Term Health, around the digital health and digital therapeutics space. So just like a normal access fund, it'll build a diversified portfolio of specifically digital therapeutic and digital health related technologies. Our goal over the coming months and coming years is to launch a suite of thematic funds. And so as part of our product roadmap, we intend to launch a longevity focused fund, for example. We intend to launch a fund around cancer. We intend to launch another one around neurodegenerative diseases, for example. And so those will serve as a huge differentiator for us as well. So we're really excited about that potential. Okay, we have another question here. This is from Omar, would Bioverge partner with other syndication organizers to support co-investment on appropriate startups? Yes, absolutely. We have done that in the past and we continue to do that. We have great relationships with other syndicate organizers where we have co-invested together. Angels is a great example. We've invested in a number of deals in collaboration with Angels. We have folks on AngelList that we have invested with as well. And so, yes, that's absolutely a great source of not only deal flow, but also is a great way to bring additional investment dollars to the companies that we're already investing in. So, yeah, great question. Okay, that looks like all the questions at the moment. So why don't I just give people another minute or two and see if any other questions come in. Otherwise, we can probably wrap things up here by about 1:30 Pacific time. Okay, so it looks like that is everything that we have today. As a reminder, this webinar has been recorded. Yeah, this webinar has been recorded and it will be available on our Republic offering page. We also have a Q&A discussion on our offering page, and feel free to connect with me on LinkedIn. I'm always happy to chat more about what we are building at Bioverge. So thank you all for joining and have a wonderful rest of the day.